Do you want me to dox you? I'll read out your home address right now. God, amateur. You're trying to kill me here. You know, I have company managers that are just dying to find out where I am.
We're so you go to Lifetime this afternoon about what, 2:00?
Exactly. You're like, so let's be clear. Where you are again, Bob? Exactly. It looks like a hotel.
I'm in room 857 at the Ritz in Key Biscayne, in case you're looking for me.
Dude, we're live. I wouldn't even joke like that. I know you're not there. So
it's nice and warm down here. I was wondering what it's like back up there. Is it warming up? Yeah, I'm heading back tonight.
Well, so I was in Miami yesterday and for a conference, and it's amazing how fast Californians like you, Jeff, wouldn't understand, but how quickly you get adjusted to really nice weather. Because I get off the plane coming back here to the Northeast, generally speaking, the Northeast, and it's 40-something degrees, which it might as well have been 10 below because my body had already adjusted to the nice warm weather. I was like, oh, this why do I live here? So
Yeah, we were in New York. I mean, I've been in California for the better part of 25 years now. I mean, I feel brittle. I feel like a little old man. And I grew up in Minnesota, where like -5 was just kind of what you went to school in. That was called Tuesday, you know. So it was just amazing. Just a little sleety, kind of windy day, and I just felt like a little old person, you know, just scurrying around trying not to break anything. It was terrible.
Yeah. That must have been hard. Minnesota, I have a relative that lives in Minnesota, in Minnetonka, and I don't know how they do it, really. I really don't know how anyone lives in Minnesota. Is everyone in Minnesota?
You know, dyslexic Houston. You don't go outside when it's like 1,005 degrees in Houston, and you don't go outside when it's -30. You just stay inside. That's how they do it.
My theory is that if South Carolina or Florida or even Texas sent a free airline ticket to everyone in Minnesota, because my theory is that people in Minnesota haven't been other places, so they're there because they don't know. Oh no, there's summer. Like there's like it can be summer.
It's a lovely place. It's a lovely place with salt of the earth people. It really is. The lakes are tremendous. No one appreciates summer more. That's why summers in Chicago were famously really fun before the city went straight to hell. Because just no one was more geeked up. Everyone's got a boat in Chicago. Just the same. That's the first thing you buy when you can rub 2 coins together. And you're just throwing money away. It's for 3 months a year, and God damn it, you're going to do some boating during that 3 months. And it was a blast. It was really fun. You know, I mean, it was,
that is true because they go canoeing. Like if you're into the outdoors, it's really tough. I know people in Florida are going to say that's not true, but in Florida it's pretty tough if you're going to try to go outdoors camping in the anywhere near water. You have to think about anacondas getting you. It's not something you find in New Jersey. So,
yeah, we went and visited the campus at the University of Miami, and there's a little lake there, and they got a little sign that says, "Do not go in the water. There are crocodiles and snakes here." So, right on the campus in this little pond in the middle of the campus.
But, yeah, that is a great campus, though.
Yes.
But let's start talking about some stocks. How about that? How should we do that today, or do you want to just keep chatting about?
We can do that.
Okay, so let's. No. And what? Was there an end? Oh. So today is March 14th. I'm David Maris. Jeff Mackey's here. Bob Morris is here. We're going to talk about. Let's talk about making ourselves better, both our homes. We're going to talk a little bit about retail, a little bit about some makeup, maybe, something that everyone on the panel here knows a lot about. And then Bob Morris is going to talk about oil and gas. I'm going to talk about a healthcare conference that I went to this week, but just briefly. And I'm only going to speak about it briefly. I was at the whole conference. Misplaced modifier. Sorry, English teachers. So let's start with you, Jeff. Talk a little bit about. You have Restoration Hardware and you have ULTA, so it's all about self-improvement, I guess.
Now, I'm watching these stocks. They have not bounced even a little bit. I don't know how much attention's being paid by other people to consumer discretionary names, but the last month has been just an unbelievable murder pit for these stocks. Virtually every piece of news that comes out is negative. So, when you have constant headlines that are tariff, trade war, whatever related, that's going to impact, no one's really sure how to quantify it, but it sounds like it's earnings negative, and that's what's happening in consumer discretionary. If you pull up ULTA, I'm watching that today because the new CEO just came in. I love a new CEO type of story. I would love to be constructive on the stock here. Up 8% earlier. That basically took back 1 day of losses. That's the kind of selling that we've seen. Ulta is unbelievably murdered. The entire makeup space has. They came out with news that was really not good, but this is becoming a really good year for capital improvement type of stories. I think you're going to see that with Starbucks as well. A little relative resilience out of these stocks as we get into the year and what's looking more and more like just kind of a wash year for a lot of these retailers. I mean, the amount that these companies have taken down their estimates over the last month or so is just staggering, given the fact that the consumer didn't really start slowing down until February. RH I pulled up just because that's a good example of a stock that should be bouncing and isn't and hasn't, and just holy crap. You can see that's a 10-year chart. A stock just went through kind of a 10-year average, down from 738 2 years ago, down 50% over the last since December, which you don't see carnage like that. You kind of want to take the other side of it somehow, but this is what it looks like when you price in kind of a straight out administrative attack on exactly these type of customers, the type of high end, going to get into kind of spending some speculative. I feel good about the trajectory of my professional life, and so I'm going to go buy some expensive furniture or stay at a really fancy place. That market is being decimated, and this is a levered up company now. Again, we're seeing a lot of stocks like this. Abercrombie's got a chart like this, just stocks that should be bouncing. They should be kind of making lows. They're not. I'm watching Alta today, and for want of anything else, I mean, my God, it's down. Consumer discretionary is down 20% in the last month and a half. So it's kind of duck and cover time. I think it's late to taking short shots, but I'm just looking for follow through. See if we can get Alta get any action.
I want to ask you about both of those. So first, do you think do you know the what do we know about the new CEO there? Is he going to come out with a kitchen sink type of quarter, or what's
kitchen sink the whole year? That's basically what the headline is, that they're up on great, better than expected fourth quarter results, and fine. Does anything seem longer ago than Christmas at this point? It seems like we should be getting ready for next Christmas more. They say, no one gives a crap about the fourth quarter. What the market is reacting to is that the new CEO just came in and said, this is, we got to get back to the customer. We got to get back to actually what we know how to do. We got to refresh the stores, kind of owned up to mistakes the company's been making, and, came up with a plan. It's, for want of better ideas, just move in some direction rather than kind of fighting this rearguard position that they've been doing with market share. And so, the category itself has been destroyed. Nothing is more post-COVID than the idea of all these makeups going to take off. So, you're just looking for some stability, and it's really hard to find it again with this deluge of just kind of negative headlines all over the place and taking earnings out. And so this is a story where you're not necessarily relying on earnings. You're relying on just kind of being smarter. Can Ulta do better? Can they earn more in the out years if they just get a little smarter for maybe the next 18 months? Yeah, for sure. Starbucks can do the same thing. Let's stop jamming people into the app and focus on the stores. That's a really good idea. And it means I don't have to care about next quarter. And that's good because next quarter is going to be a shit show.
But is it different? Like, so when Starbucks says, hey, let's focus on the stores, what they mean is, hey, let's simplify the menu and get the customer experience a lot better. And although that's expensive, it's not like refitting a store. Is it a bigger challenge for an Ulta? Because whenever I see an Ulta, it reminds me of, I don't know if you remember Bam Burgers from years ago. They were acquired by Macy's, but they always have this feeling of like an old Macy's, like an airport, almost like a duty free in an airport. It's almost like you don't want to be there. But a Starbucks, you're there for just a few minutes, so you don't really care anyway.
Well, with Starbucks, they're able to it's what I like about them is they're coming up with KPIs finally that make sense and are consistent with the customer experience. Famously, 4 minutes is the bogey they have now, and so they've replaced a lot of these far flung initiatives that they had before. You know, we must address them this way. We need 5 zillion different items, basically an infinity menu. They're just doing smart stuff like let's maybe not have 5 million different ways to make a coffee and focus on getting people in and out of here fast and friendly and convenient and you know accurate orders. That's a nice thing to do. In the case of Ulta, it's like give me a raison d'etre. Why do you exist? Because yeah, you're just a creepy department store for makeup. To your point, I don't understand. I walk through a Target and it's like, what, you know, are we subletting? Why is there an Ulta in my makeup store competing with my makeup and my elf makeup? Like, what the hell is this? It doesn't make any sense in particular. So, you know, I don't know where they think they're gonna go. I don't think the world needs a lot more of these. And so I don't really know. I haven't done the work on Ulta just because it went from sort of a story I wasn't that interested in to now it's a turnaround story, which, you know, I think that you'd need fewer Ulta stores is sort of what the conclusion comes to. I'm not sure how to price that in.
And then on restoration hardware, what's your sense of the value, like the price point to value ratio? You know, yeah, they're targeting the high end consumer, but are they giving enough quality for the high end consumer? What I mean, like when you go in and you start
maybe
looking at these things, do you when you go into the store and you kind of look around and do you get the sense? Because what I wonder is if they're like Bob Morris is their perfect target audience, super well to do, successful Wall Street analyst who pay whatever for a couch. But I don't know if he's buying a couch there. Like, is it nice enough? So that's what I always get. Is they price really high.
And that was kind of my criticism of them before, is that they used to just have weird, like, why do I need a $15,000 end table supposedly made out of wood taken out of a Tudor mansion in the 1500s? Who gives a shit? Like, it's crazy type of stuff. But that's less of a problem now. Now they have a problem that they decided to go into just a ton of far-flung, all super high-end businesses. David, you want to rent a jet? Let's go halfsies on an RH jet that we can rent. Why? Why is the furniture store in that business? Just cause. And so Gary Friedman, who's the CEO and one of those mercurial guys who has earned the right to just kind of do spectacular flameouts if he wants to, because he's pulled it out of the ash heap before. He's got this company deep in a lot of property development. They're developing in Aspen and France at the same time, a massive housing project in the mountains of Aspen, and they're trying to open a store on the Champs-Élysées, which, if I wanted to make a money bonfire, the most efficient possible way to just burn just dump trucks full of cash, that's probably what I would do, is 2 construction projects, one in France, one in Aspen. I need a place that's a pain in the ass to get to, and another place where every single local hates me and is going to screw me to within an inch of my life. Perfect. I get a little bit of both in those spots. And now, so what they're pricing in, they went all in on, and if you look at the stock, about 6 months ago, he started talking about demand upticking, and he didn't mean revenues. He just said he could feel this pent up demand and the feng shui, the collective mojo, the whatever the hell of the high end customer base. And he's a smart guy, but was saying things like, by the time you humans will see it, it'll already be gone, and we're gonna just take a huge amount of share. Well, the stock doubled, and then in December they came out with more kind of demand vectors and hallucinogens, and it turns out that that's not really revenue. And so it turns out that there's a reason that demand isn't an item on income statements, because it's not a real thing.
How long has he been? How long has he been there?
He is the guy. He's synonymous with it.
I was going to say, in healthcare, there is no CEO that lasts. If your stock's down by 50% or more, you just don't last. If you're a revenue-driven company, if you're a biotech, you can live forever. But that doesn't happen here. Like, I guess he's synonymous, but at some point, doesn't someone come in and say, "Hey, time for somebody new"?
No, because it's he owns a ton of it. He's kind of he's just embedded. You can't take him out. People can't really imagine what they would be. And it's one of those things that who comes in and fixes this, at this point. I don't know where you kind of go with your residential Aspen properties and your half-built stores in France. They built in a huge mansion like 50 miles outside of London, and just took over this space and made it into kind of a nice hotel, but also a furniture store. There's been almost no sales at all. And apparently, like, the furniture is too large to actually fit in the houses in the surrounding area. So they're making mistakes that
I just don't know who in the world is looking at high-end resorts and saying, well, okay, I could stay at the Auberge. I could stay at this Ritz-Carlton in Florida. I could stay any number of places. But I think I'm going to stay at a Restoration Hardware. Like,
apparently
that would be so far on the list.
People who have been there, they're really nice. It's really nice. It's also just a totally different business than selling furniture, and a totally different business, for that matter, than having a housing development in Aspen. He wants to be synonymous with taste. He literally just kind of comes out with these ideas that maybe the French have been sitting around waiting for. Please, God, will America come over here and give us some class? Help us freshen up the joint and give us some artistic taste here in Paris. My God, it's please, America, rescue us. That's his attitude. He's like, we're just going to become a brand. We're going to be the LVMH of whatever the hell it is we do. And so, some of the parts of the business model, the flywheel that he's designing in his mind, are things that sound really old, like, kind of a network. They're going to make content. So shows. Okay. This is a show, is that worth $8 billion? Like, it's what the hell are you talking about, Gary? But he just kind of, he he's done a lot of financial engineering. He's jammed shorts on this in the past quite a few times. They bought back a huge amount of stock. But, to get back to the larger point beyond just my RH rantings, is the companies out there that are a little levered up. And we're looking at this year as kind of a make or break or a cash flow type of necessary year. You got to price in that this market's not going to turn around. It doesn't look really friendly to high end people buying furniture or doing resort stuff. Like, it's all that seems to be going slower. And he's levered up to the same kind of super small pie chart of people in about 4 different ways. That's not a really balanced book. It works spectacularly. It's an enormous swing for the fences, you go hero type of move. But holy crap, all of a sudden now you have to price in. There's a real chance that they don't make it and they have to kind of refinance in a bunch of creative ways. You're seeing that at Kohl's as well. They all of a sudden, it's like, holy shit, you've gone from a reasonably profitable, if unexciting type of proposition to an actual death watch. Maybe people aren't shipping the inventory at Christmas type of story in just kind of 6 months. That's amazing.
I really don't get it. It looks so horrible. Now, why didn't I short it beforehand? It's going to be a question before, because I've been in their stores and I didn't like their furniture.
Ben Brian, you think I'm ranting about this now? Ben Brian and I have spent hours talking about what a shit show this is. And just if you look at the chart, it has stayed kind of within that range. It's been going down to 220 over and over again. This would be where you buy it, but kind of trading off this thing has made a ton of sense. But shorting it is kind of, in retrospect, serious no-brainer. Wrote articles critical at the time, but it was such a steamroller. It was just one of those that, I feel like it should go lower. Am I willing to get dragged out of the arena in my shield because I am dedicated to shorting this? No, it just became a curio, a weird story that traders talk about.
Yeah, that's well, I don't know if we're going to move to something that's more inspiring, but maybe a better value.
I find that kind of fascinating. I don't know. I enjoyed our conversation.
No. I think it's absolutely fascinating because I didn't know the story about the hotels and the rest. That's absolutely ridiculous because there is zero chance I would go to a Restoration Hardware hotel, and there is zero chance that I would buy. Again, their things are nice. If the price point were about 30-40% lower, I think they price themselves out of the market that they're trying to go to, and it might be great in a bull market, but I don't know. I don't see.
They need it fast. Yeah.
Yeah. But oil and gas.
But again, these stocks, should the stocks bounce? I don't know. You're getting to I was looking at Abercrombie today, which is another one that just goes down in an absolute dead ass straight line. That's now trading at 6 times forward earnings. So say earnings are a disaster and they only earn $10 a share. Well, now it's at 7 times forward earnings. I mean, it's pricing in just an absolute destruction, a Dresden event in what happens to their margins and their cash flow. They're not that broken. The stock should be cheap, but it just is death watch. I mean, someone huge is trying to get out of that name every single day. You don't really see moves like this until typically the very end of bear market moves, but it doesn't feel capitulatory yet. It just feels like, another day, another down 0.75% in everything.
Yeah, that's very different, right? It's a very different kind of chart and feeling when you see down on up days, down on bad days. The RH chart is really, hey, we stink. The market realized it. We're down, and it had previously been down too, but it was a big, big realization, I guess. 2 days ago.
Yeah, who knows? Yeah, I mean, all this stuff. We could have the same conversation for what the hell's holding them up, verbatim. So that's the kind of the oddity of this. Is you're right. It looks like someone discovered something. No one unearthed anything. It's I think yesterday it was down 8% on some sort of bearish report that was just kind of a rehash of articles I've written on this site and other places. And this is kind of a hobby horse of mine. So, nothing's been discovered here. Abercrombie didn't just slow down. It's just every piece of incremental news. I don't know how much that's going to cost. I don't know how expensive that is, but it seems kind of shitty for the discretionary consumer. I mean, it's Walmart and China meeting. That seems expensive.
But right, the difference though is like, and I don't know this space at all, and I'm just pulling it up now, so I apologize if I'm really off.
Yeah.
But if RH has a consensus number of like $13, so they're at something like 20 times earnings, and Abercrombie you said was at 6. So there's at least a valuation basement somewhere for an Abercrombie. But at RH maybe it's further off. Am I right about the disparity in the earnings?
It's
multiples.
Well, we're really talking about a cash flow situation at RH at this point. They're so levered up to a recovery on that high end that you're pricing it less off what they're going to earn next year. If there is a boom in kind of this high end, super small diagram of customer base out there, they are going to kick hellacious amounts of ass. If you look at kind of the rises in that stock in the past, it's because demand for kind of furniture at any price, the pull forward from COVID was legendary, but it also demonstrated that there is a kind of economy that's strong enough at this end for people to not really give a crap. There's just good markets to sell $15,000 couches to people that don't look at price tags. This just isn't one of them right now.
All right, well, let's turn to oil and gas. Again, I'm not sure if it's more uplifting, but
it's lateral.
Yeah, let's talk. Hey, Bob. So let's talk about CNQ, and you had another one you want to talk about. What do you say?
I'm feeling good about energy here, and we talked on Wednesday about what are the bull factors, the bear factors for the commodity, both oil and natural gas. But energy's held in well here, and you've got oil prices down close to $66 a barrel. And yes, they pulled back a little bit year to date, but I think they're acting well for where the oil price is. And natural gas is holding in at around $4. Yes, we're into the shoulder period almost here, but I think people know that. They should be factoring that in here. So I'm not buying or selling anything here. I'm just feeling very good about the positions I have and think things are shaping up pretty good, looking ahead for this year. The biggest concern for oil prices, if they were to pull back further, and I think $66 a barrel, there's not a lot of downside here unless we get a big slowdown in the economy. And a lot of the fears that have crept into the energy stocks are the same fears that have crept into the overall market, is that this tariff war will reduce demand globally for goods and products, and that impacts energy demand on itself. So, other than, us going into a recession here, I feel pretty good about where energy stocks are, where the commodity price is. The market should know that in 2 weeks, and I think it's factored in here, that OPEC's going to be putting some incremental barrels back into the market. They've still got some production held back. but they've said for a long time they've delayed this 3 times. So now we're finally going to see some of those incremental barrels come back into the market. They've been promising for 6 months now. And I'm looking at some of these names here, and my core holdings. I think everybody should have core holdings in energy here. On the names, it's CNQ, EOG, Diamondback, then Chevron, Exxon, and then on the pipeline companies, it's Williams, Kinder Morgan, and ET. And the one thing that was in the headlines this week, and I don't know if it'll amount to anything near term, is that Trump's going to be meeting with the governor of New York to talk about some of these pipelines and getting them approved and getting more pipeline infrastructure into the Northeast for natural gas to supply more natural gas for power generation in the Northeast, which we need. And, is that going to result in any new pipelines being built this year? No, but it's a step in the right direction. I think is positive for the energy sector in that regard. So, again, I'm feeling pretty good about where I sit here on energy and those core holdings, those core names that I own. We were thinking we bought some of these names, particularly the gas names. We added to positions in EQT and Expand Energy here a couple of weeks ago when they pulled back. I've got a market weight position in those. If we were to get a further pullback in the gas names, is where I first look to put money to work. But they're bouncing nice with gas at $4, and people know we're going into the shoulder period here with storage inventories after a colder than normal winter below where they were a year ago. So that's setting up very nicely for the fundamentals for natural gas. So again, I feel pretty good about where we are here on the energy front and looking forward here at the commodity.
All right, sounds good. I own some CNQ, so keep going on that.
And we said they were going to raise the dividend when they reported. They reported last Thursday. They raised the dividend, and that dividend yield up here is, I think, close to 5%. It's safe. They raise the dividend every year, so I'm not worried about that. And that's one you hold on to and are happy with that dividend while it over time I think continues to move up. It's been outstanding, one of the best performing energy names in the sector over the years, by far.
All right. Sounds good. You did say get it under 30, so it's still under 30.
Yeah. Still under 30.
Well, good. I want to just mention, I was at the Barclays Healthcare Conference earlier this week, got back last night, so I haven't had a chance to kind of collect my thoughts more formally, but it was between a wake and a funeral. Biotech hedge fund guys in sweater vests or in puffer vests looked particularly sad. There were group meetings, and you could hear in the group meetings. What was funny is the pod shops are talking up their names and trying to give the management teams, like someone will ask a question and the management team will answer it, and then the pod shop is, well, look, what you really mean, and like what you've said before, is that this is something that's going to play out like this, explaining what management was trying to explain and trying to do it in a way that's better than the management team was doing. And to me, that's emblematic of, hey, my book is really hurting. I'm going to explain to everyone why they should own it, like why I do, because this is my thesis. It was pretty transparent for the folks there. The long onlys were also like, hey, I'm not that, it's not that compelling. They're not like, hey, this is the time to be buying. I would say there were some great names that I met with, some really interesting names, some biotech names that are revenue generating, that don't need cash and have been thrown out with the washout here. So I'll talk about those this coming week. TEVA, just to hit on that one. This was a little bit of an apology tour for the CEO. He had a great JP Morgan conference at the start of the year, and then they reported their earnings, and that was disappointing, and that was incongruent with what he had said at JP Morgan, that, hey, things look great. And it was good to hear him say, look, I've learned a lot. That was a mistake. His mistake, though, didn't help anybody. Now, I do still think that it's very cheap. I think you could be in the 20s at 10 times earnings. I think that's reasonable. The other generic companies that I met with during that time all said that the pricing environment looks pretty stable, which is very good for generics. It's rare. When I say stable, it means generic drug prices always decline. About 4 or 5 years ago, they were in a very rapid decline. So this is a more orderly decline. I don't want to give anyone the impression that this is an organically growing business. It grows through new product introductions only. But it seems like there are a lot of products going off patent, and so I would say that was actually a pretty good meeting. I haven't sold any of my TEVA, so anyone who's in that mistake with me, I'm happy to share that I actually walked away from the meeting not more concerned, not overly enthusiastic. It's going to take a little while for this to work out, but I think on a multi-year basis, if we get to 10 times earnings, it's going to be a pretty good return. This is not without risk. I would say, I'm not going to get into the weeds. If they're doing a big divestiture, and I'm not so sure that that's the best thing, and they wouldn't talk about the valuation range that they're doing that divestiture in. So you could have a step down when they go out with this divestiture and say, oh, by the way, the new EBITDA number is a little bit lower because of this. So if you're not there, I think it's cheap. If I didn't own it, I'd buy a little bit, but I could also convince myself, if I didn't own it, that maybe you have a better opportunity sometime in the next 3 months. But that's kind of what you say in when the market's declining so quickly. I'm sure everybody says that, is like all of a sudden everything is, well, there might be a better time. There might be a better time.
I wrote a piece yesterday about my stocks. I just make lists in this market. Like, you're either trading the crap out of this, in which case you don't have time to make a show. You better be watching your book all the time in this tape. Or, I just kind of make lists of stuff like TEVA. That sounds like a name. I like that he's on the apology tour, and we'll see how that plays out for his apologies. And maybe that'll be, something I play on the side. I see a book full of stuff that is it going to go up tomorrow? Oh my God, no! Like, look at the tape. We announced 100% tariff on champagne the other day. Like, there's just bonkers crap coming out. You want to buy ULTA? There's going to be a trade war against countries using American makeup to become beautiful, and they're ugly countries, and we're going to have a trade war with them. It kind of everything's on the table, and so we got to wait for it. Just let it play out. Eventually, it becomes background noise, and we'll be able to buy a lot of stocks. Just tons of them. But
speaking of the trade war,
to buy them once you do.
On the trade war, everyone was pretty complacent about it, which is surprising. TEVA did come out and say, well, most of what we make is in the U.S., but then when you get to the numbers, it's not like 90%. There's still, and I don't have the numbers in front of me, but it's still like a big chunk, like 25% or more. And medicines are often excluded, and generic medicines should be excluded too. But hold on, someone's just pinging us. Aha. Now I know. Okay, so they say that they'll be excluded, but we don't know on this time around if medicines will be excluded. And generics are part of the low-cost solution so they should be excluded, but who really knows?
Right.
But we'll see. So I'd say it was a great meeting for getting ideas. I am making those lists. There are a couple small biotech companies that I thought were excellent. And the only last thing I'll mention is there's a company, Soleno, which I mentioned the other day, Stat, which is kind of part of the Boston Globe, but they put out an article about it yesterday saying that they think it will get approved. This is a drug for people who overeat, but not obesity, but it's for people with developmental disabilities. It's a disorder that it's a voracious appetite where you can become violent because you feel like you need to eat. And this stock will either be a double or a triple or a zero. And so for other investors, if I were telling my one of my siblings about this, I would say, listen, I would stay away. I own a little bit as a lottery ticket. I think that it's slightly more likely to get approved than not. And the approval's by the end of the month. So you can either own it and risk it or not. And I've asked friends of mine who run hedge funds at these pod shops, and they've said, yeah, it's either a zero or a triple. We're not involved. So I think a lot of the smart money is saying that risk profile is not for me. But
Yeah.
if you have more bills than an honest man can pay, you might want to look at it. But anyone else with any questions or any other points we should bring up before we call it for the day?
Hey, David, let me ask you about two bigger names. I don't know if these fall into the exact biotech category, but larger names have held up very well here, AMGN and ABBV. And I know there's been some positive commentary out on AMGN recently. They've held up very well in this sort of market pullback. Where do you stand on those names, or were they? I don't think they were at your conference, were they?
No, neither were. It was surprising is that Barclays didn't have a lot of. They had a lot of IR people, because there were two competing conferences. They used to own this conference, and then everybody saw it as a great week, spring break week to put conferences to compete with them. And it's much easier to get to Boston than Miami for a drug company. So that's based in Boston. I own a little bit of AbbVie. I don't own Amgen, kind of regrettably. Amgen has a decent pipeline and a decent base business, and they're involved in obesity. And people are wondering, well, will they have a winner or not? And it had been pretty washed out. Pharma's actually done pretty well over this. Large pharma has done pretty well overall during this downturn. It's proven to be defensive, which historically it has been. The last few cycles it hasn't been. So it's good to see that it's the cheaper ones like Amgen have been holding in. AbbVie I own for the Humira transition. Like I thought that was going well. They had the largest drug ever, and the controversy was whether or not they'd be able to transition to other drugs, and they have. But even there, I just wonder I don't know what just happened. Someone fell off a ladder or something. Even there, you wonder in this type of market will they come for these larger ones at some larger, cheaper ones at some point? Is the shifting from one sector to another going to turn into just overall selling? But I do like pharma here, and they're two great names. They're two great names, but I think you could make the argument for almost any of the large pharma. They're not takeout candidates, though.
Yeah, and they pay a nice dividend. That's true.
Yeah, they do. But we've talked before, Bob, about Pfizer in the last couple of years. They paid a great dividend, and that didn't protect them from bad news. Now it's kind of helping them a little bit now that they're lower, but. Yeah, but pharma dividends sound similar to like a CNQ type dividend, where if a pharma company is cutting their dividend, like if a large pharma company is cutting their dividend, they're in serious trouble. I can't recall a large pharma company suspending or cutting their dividend.
Yeah,
and like this, I'm sure it has happened in the last 20 years, but I don't remember it.
Yeah.
So. All right. Well,
I'm waiting for a dead body or a phone to ring on my end. I don't have any disturbing sounds coming up yet.
Yeah, I know. It sounds like your companies are a lot like my small companies, like the ones that just do whatever they want. But those are big companies doing crazy things. If one of the pharma companies decided to start a hotel, I bet you actually a Pfizer hotel would do pretty well. Grab an AMGN.
They've got cash to burn, and holy crap, yeah. I know a guy they should call. Gary might become available in the next few months.
All right. Well, everybody, on that note, it's March 14th. Have a great day. Have a great weekend, and we'll see you next week.
Thanks, everybody.